Welcome, everyone, to the Fiscal Philosophy YouTube channel, where I discuss many stocks that are in my portfolio, some that aren't, but MPW is certainly one that has stuck around and been a popular topic on this channel since almost inception. So, the embattled medical REIT recently offloaded Steward and ejected them from their portfolio, however, at a great cost. And shareholders have been left kind of in this limbo where we now have this 8-cent quarterly dividend and not much forward guidance to go off of. The last earnings, the analysts didn't really ask any important questions or get any important answers. So we've been just kind of sitting here in this sort of strange vortex, so to speak. Now, the stock is heavily shorted, okay? And some interesting developments have occurred. And I'd like to get into that a little bit because this is one of the only things that's really changed lately with regards to the stock. Before I get into that, I'd like to remind you all that this is sponsored by Moomoo, and you can follow the link in the description below to get 8.1% bonus APY on your cash for the first 3 months. Why not stuff your own bank account and help me stuff my stockings by supporting the channel by going to our sponsor Moomoo and rewarding yourself with that 8.1% APY and up to 15 free stocks when you deposit $1,000. Now, back to the short interest. So this is something you probably are used to seeing from Fintel, which tells you how many shares are shorted, days to cover, and the percentage of the float that is currently sold short. Now, there's like a 2-week lag or something on this information. Okay, this is one element of what could constitute the ingredients for a potential squeeze, right? Obviously, a stock that has 44% short interest is more likely to have some kind of a short squeeze in the future than a stock that has 2% short interest, right? That's almost like a normal level for like most stocks. So that's kind of unremarkable. Almost every stock has at least a little bit of short interest, but 44% is quite high. Now, recently, we had a couple of whale investors. That means basically big, super rich, orders of magnitude beyond what the ordinary average investor would have, bought large chunks of the stock, over 5% each. And that, of course, sort of reduces the amount of available shares out there for short selling. But that on its own has yet to really trigger anything to happen. And what I've found from discussion on my Discord is the reason that shorts are not covering, or one of the reasons, is they can kind of afford to sit and wait and hope that it goes lower, because it just over the last year or so, maybe longer, it has just simply not cost them a whole lot to just hold these short positions open. Granted, yes, they have to cover the dividend, but the dividend has been steadily getting slashed, so that hasn't been too painful for them. However, something interesting has happened, and I'll get into that now. So the chatter over the last week or so on my Discord, which is linked in the description, has been about the cost to borrow being higher. And I found this website that also pulls the data from the brokerage Interactive Brokers on what the cost to borrow on that platform is. And it's showing 11% today. Now, the other interesting thing is that they actually even have a chart that shows the last little bit of history. So over the last week, you can see that it went from the low to mid single digits up to close to 15% and then just over 15%. It peaked at around 16% on December 9th. It's leveled back off a little bit down to what we said earlier, 11%. Now, the reason this is important is because if it stays at these higher double-digit levels of 11, 12, 13, 14, 15%, what have you, shorts are paying that plus the dividend in order to hold this short position. And if for example, the stock price were to come up, right? The percentage, the cost to borrow, I believe would be based on that higher share price, not on this lower share price. So suddenly, their cost to hold the position open goes way, way up. And that might start to cause a rush towards the exit, perhaps a little bit of a squeeze, potentially. So, as a long in this stock, somebody that's invested in it as a value investment or what have you, or as a swing trade, whatever it is, if you're long this stock, you want to see if a stock is heavily shorted, the cost to borrow the shares higher and the short interest higher, because that means something very nice could happen if there's just a little bit of buying enthusiasm to light that spark, to ignite the whole thing, so to speak. So that is the only thing that's really changed that much in the recent period since this last earnings release. Not much else has really gone on. There's some developments with Prospect, but nothing like super duper crazy that's really moved the needle on the stock price or the long-term outlook. Of course, if you found any of this information helpful, I encourage you to join my Discord link in the description, like the video for the algorithm, subscribe to the channel, and help me grow my audience. Also, my Twitter at Mr. Macho Mog, link in the description. Discord also down there, and catch me every Saturday at 8 p.m. Eastern, Catch the Kings Live. Also, give some love to the sponsor, Moomoo. I really appreciate it, and it helps the channel so much. And plus, you get your free stocks and your bonus APY. It's a win-win. Let's go for it, ladies and gentlemen. And also, 'tis the season. Let's stuff each other's stockings. Wink, wink, nudge, nudge. No homo. Later, everybody. Cheers.